Hello, and welcome to the latest episode of the Advice Guru Later Life Lending podcast. Today, we're joined by a real friend of the show. Leon Diamond has returned. Hello, Leon. How are you?
Stuart, good to see you again. Good chatting. It's always great to be on this show. So look forward to the next 20 or 30 minutes of chatting away. I'm really good. Really
Excellent.
good.
That's good to hear. Where are you today? You look like you're in, I don't know, an underground cell. Where are you?
I'm in my office actually, but yeah. So just enjoying a little bit of peace and quiet and getting through the work and getting a chance to speak to you and then some listeners along the way. So
Yeah, brilliant. Well,
yeah,
the first thing I
up
have
in
to
that.
tell you, and this was set up, obviously, is you are our 100th guest. So over the last 2.5 years, we've now produced 100 episodes, and yeah, that's a real feather in our cap, and lovely to have you on board for the 100th one.
Well, I feel very special, Stuart, and look forward to the 1,000th podcast, which I expect to be invited on.
Oh, mate, I hope I'm long retired by that time because it's taken 2.5 years to do 100. So do the maths. I think I'll be yeah, well retired or pushing up daisies. I think so. But no, great to have you on board. And before we came on, we were talking about something, and it's a really good point. So we've done 100 podcasts. We've grown to it's just under 700 listeners now. And I think we've probably saturated the later life market, or the later life market has become saturated. And our next aim for new listeners is to go into the mainstream mortgage market because obviously that's much broader, much wider. What are your thoughts on that?
Stuart, I'd say a bit controversial. The market needs to come together. Lenders, the regulator, and we've got to change the word of later life, right? Because 4 out of 5 products are non-equity release that are sold to the over 50s. So equity release is a product. It's a siloed product.
Yeah.
Mainstream has later life options that are interest only, capital at interest, retirement interest only. So I think, there needs to be a change in naming convention.
Yeah.
And that is later life are for people over 50. Because even in the sales, you look at the stats in UK finance, 4 out of 5 is mainstream. So mainstream brokers need to realize, later life is just not equity release.
Yeah. It's really interesting because this podcast did start as an equity release podcast, and then it felt old virtually straight away, and that was 2.5 years ago. So we went later life lending, and I struggle to get more than 600 people listening because the later life market is still the equity release market, with people having renamed it. Whereas if we can go mainstream into the mortgage market, we know there's, well, how many thousands? Is it 10,000 advisors in that market?
Or plus, depending on the day and who's active.
Yeah, that's very true. Well, they've got the qualifications, but they've moved away from it. Okay, so let me be devil's advocate with you then. And I know you're perhaps not the right person for this because your business is doing what people ask me. Because I'm always asked, okay, so if I'm going to be an advisor for over 50s, how and who will give me sourcing to be able to source easily and simply for my clients to give them all 4 options? So you guys do it. So why can't someone do it for the market?
I think it will be just a matter of time. Both of us have seen, David at Knight Frank come out and question the sourcing systems and to get the FCA to look at the current sourcing systems. Because they are biased, right? That they are product specific typically, and focused, um, you know, for a specific lender in mind.
Yeah.
And that, as a whole, that's most probably the majority of the market. It most probably takes a few lenders to get together to realize that actually, let's put our customer first, right? And our end customer, right, which has a massive need. And we all know the need has never actually hit expectations of origination in the marketplace. But if we can come together as lenders and actually put together a neutral, sourcing platform, the market will rise.
Yeah.
We'll give better customer outcome. We'll make it easier for brokers. We'll make it consumer duty compliant, and net benefit is all lenders benefit.
Yeah.
Unfortunately, today in the marketplace, and ideally this changes, and we hope as LiveMore as a business, and I set this out to increase the market, not not just increase market share.
Yeah.
That's not out. That's I want to be driving when I'm speaking to end customers who are fourth, fifth, sixth mortgage broker along that can help them, and LiveMore have helped them. I want to be speaking to those customers and saying, I went to a broker, I solved the situation, I came to you, or I came to someone else. I don't mind. But in that scenario, it's a win for everyone.
Yeah, do you know, that's really interesting you say that. And there's so many things that we'll talk about that you've just said there. But you've just but because I am still advising, because it absolutely keeps my finger on the pulse. I had a mortgage advisor send me a lead the other day that said, Stu, interest only isn't right for this client. I can't find the Rio. Can you see if lifetime mortgage works? And I said, yeah, I'll see if that will work. And it didn't. Lifetime mortgage didn't work. But as you know, I like LiveMore and your products and your sourcing and your calculators. Anyway, I ended up doing a Rio for that client. So that says something's fundamentally broken with the system, because that guy is a really good, experienced mortgage advisor who's worked out that Rios don't fit his client, sent it to me to do a lifetime mortgage, and I've ended up doing a Rio with you guys. What's going on?
Look, I encourage brokers, whether they use us or not, go to our LiveMore Mortgage Matcher. Whilst it sources our products to start with where we sit today.
Yeah.
I think that mortgage brokers can have a look and see what are the options out there. We do a bit of a quick holistic fact find. We show options of capital and interest only, retirement interest only, and equity release. And they'll get a pretty good idea if they can place it. Yes, we understand the customer, in my opinion, better than a lot of our competitors in mainstream space. And so our affordability is generous, and our property criteria is very wide and vast as a specialist lender. But it will at least give people options to understand where they can place it. So we really want to leverage that LiveMore Mortgage Matcher and just encourage people to try it out. You don't need to come to us, but it's a great indication of where you can place a case.
Yeah, I think you've hit the nail on the head there, and I think I've lost count. My most used phrase on this podcast seems to be a rising tide lifts all ships. So
Yeah.
your mantra is to grow the market, not your market share. Advice Guru is trying to do exactly the same with supporting advisors in generating more leads and converting more of those leads. And we've agreed that the market needs a sourcing platform that can source all types of mortgage and all lenders. You guys have got the tech to do that. Would you collaborate with someone to make a market one, or is that too difficult, or is it just that there isn't the other companies out there?
Yeah, Stuart, and to your point, I'd love to collaborate, and we are there to, rise all ships. I'll throw it out. Like, what was equity release origination last year? Stuart, do you have a rough idea what the equity release market did last year?
Oh, it's awful, but 2.3 billion.
Exactly. And how much of that was remortgage of an equity release product?
A small, that's a growing percentage, which is great, but
Okay.
a huge portion of that, because yeah, 3 years ago, less than 1% were remortgaging, but now we did some work with the Daily Mail, and more people are doing it. But a huge percentage of it is people doing further advances.
Yeah, so I sit back here at 2.6 billion, and everyone's focused on the market share at 2.6 billion. What we as lenders should be thinking is, how do we give customers better outcomes, right? Using technology, leveraging technology, and turn a market that there's 2.5 trillion of land wealth in the UK over 60s, an aging population, living longer, healthier, needing to find options as the cost of living's increasing or lifestyles changing or becoming the bank of mum and dad, a top six lender, as I was told today.
Yeah,
We need to come together and grow the actual market rather than focusing on, I want 5% more of the market share as it sits today. That's the opportunity. How do we do that? To your point, collaborate, give better outcomes for brokers, support brokers in a better way. And I'll say, LiveMore is open to partnering either with brokers or lenders to provide a better solution in the marketplace.
I love that, and we'll get that out as the key phrase of this, and get that out to more people. I've got a few ideas in mind as to, because I know there are a couple of companies who are working on the exact multi mortgage type sourcing product that we've discussed. So yeah, I think people need to listen to this and get in contact with you or with me or with both of us, and let's make this happen, because when we do collaborate, we do make things happen. There's so many changes happened in the market in the last year, product wise, because we have said no, the products aren't good enough. There's not enough within them. So let's move on to that topic then. So you've shifted some huge boulders in the last 6 months and created products that we didn't think were possible. So talk us a little bit through those products. What have you introduced in the last few months?
Yeah, I'd like to step back, and if I can, we launched with a retirement interest only mortgage. There was a lot of press that interest only mortgage, retirement interest only mortgage, didn't satisfy the needs. Just look at the outcome we have with brokers and customers, and the perception of retirement interest only mortgages don't work versus reality of a specialist lender coming into the market like Livermore is very different. Yes, a retirement interest only mortgage that is by a building society or some building societies or some banks is putting a square peg in a round hole. If those customers could have refinanced, they would have already. That criteria and underwrite was built for a customer already being able to refinance. And so we are a specialist lender. And so we've really solved the problem around retirement interest only mortgages, not only at the customer side and underwrite side, but we've led and securitized and been the first leader to securitize a retirement interest only mortgage portfolio and created methodology with the rating agencies. So, I sort of
Yeah.
reach out and think retirement interest only mortgage has got a bit of a poo-poo as a bit of a start. Part of that was the equity release market, not wanting people to take market share away from them. Let's be truthful. Come on.
Yeah.
Like
Yeah,
all
I
the
think there is
press
an
to
element
start.
that Rio's, yeah, they're a good idea, but no one ever gets them. So they haven't even tried to source it. They've just closed it off with that really, quite quite stupid phrase rather than trying to source. But then they were fairly difficult to source. But I'm amazed when I use the Livermore calculator at how much you'll lend someone, especially if it's like for like.
And that's because we just understand the customer profile. We've done a lot of research, spent a lot of money, and we're introducing new technology, including AI, into modeling out a customer's profile to lend them what they need. And guess what? We've had zero defaults.
Yeah, yeah,
Had
but is that
zero defaults
bigger?
on our book, and we've
Wow.
catered for a truckload of clients with awesome outcomes. So that's just on the retirement interest only side.
Yeah.
And then I know you're hinting at the equity release space as well, aren't you, Stuart?
But look, all of it, it's just that, sourcing didn't used to come up with Livermore. And that's an issue about the sourcing um, platforms as much as it is about Livemore's product range. So has that been a conscious thing to solve the fact that you weren't appearing on the largest sourcing platforms? You created a product that would appear, or did you just think, actually, the clients need this, this, and this? Let's create it.
Yeah, we love working with brokers and end customers. We had 3 end customers come in and talk to us. You know, 2 of the 3 were shedding tears while discussing their outcome to us as a business. There were tears in the audience from our employees as well. We're having a massive impact. Our mantra is, more yes, less no. How do we find more yeses to say yes to a broker, yes to a customer, and solve their situation? And that comes into our product design and proposition. So some of the sourcing tools don't source us well at all, but yet we would be saying yes to a lot of those customers. And so some of the sourcing systems source us well in other products. And I think you most probably seen, in the equity release space, we've sourced quite well over the last couple of months, and seen a big influx of interest as well as origination on that side.
But the
But it
5 year,
comes back to, I think the sourcing systems are broken.
yeah, which is where we started this, and we're going to have it in the middle of this, and we'll probably end with it. So yeah, we need to all work on something about that. But it it's almost as if the companies who are doing well on those sourcing systems don't want to be involved with resourcing or creating a new sourcing system in case they're not appearing top in that one. But yeah, maybe that's my cynical view, but maybe it's a realistic worldview. I don't know. But I've been finding your 5 year ERC products very good, because there seems to be a wave this year of clients coming in saying, okay, I realize the rates are higher. Um, they haven't decreased like we thought they would over the last 6, 8 months. In fact, they may be doing the reverse. So how about a product that is on an interest rate that is slightly higher than I wanted to pay, but for a shorter term ERC, so that I could potentially come off it? Is that a reality?
Yeah, so my background historically, I'll touch on it, was, I traded interest rates, and looked at macroeconomic data. Yeah, I'm of the belief that, you know, low interest rates or close to lower interest rates are a thing of the past. UK is a natural importer of inflation. We're seeing stagflation in the UK. The cost of living's increasing. I think that it's going to be tough for back end rates. And when I say back end rates, 10, 15-year rates, to really weaken much more than where they are today. They could go down a bit,
Yeah.
but I think they're sort of stuck here. I think the risk potentially is to the upside. So, we've thought about this, and we've put together some options where sort of gives customers a bit of peace of mind that, well, if I do get it wrong, I can refinance in 5 years. But guess what? If I'm in this and rates go up 3 or 4%, at least I'm good, right? And so, we're trying to empower and work with brokers to give customers options. And the way I put it simply is, we're trying to be a solutions provider for brokers and be their assistant, like an AI assistant, basically, as we hear about it today, providing different options relative to just a lender pushing one product
Yeah.
as a whole, which historically has been the case. So, that's our view in the market. We will continue to expand our offering. I think we have about 300 underlying products as it sits today, under the 4 SKUs of capital and interest only, retirement interest only, and equity release. We're going to expand that. And I also encourage other funding partners, if they want to be part of that process, come speak to us, because it comes back to, how can we increase this whole market, right? and really satisfy the needs of the UK consumer. That, there's a number of customers out there that need a mortgage, whatever that mortgage is, be it equity release, retirement interest, or the capital interest. They just want to stay in their house.
Yeah. Yeah. No, I love that. And I love that ethos. And we seem to be working towards that, but just a little bit too slowly. So if I ask you a final question, then if we were meeting again in a year's time, which we probably will, it won't be for the thousands episode, but probably about 150, what would you be looking back on 2025 and saying, actually, finally the market did that, and I'm really proud that LiveMore did this? What do you think would be the two things?
Number one is we get naming convention aligned. Later life living, or later life lending, I should say, is not just equity release. Right? That in itself is a constraint and misleading to the end customer, which stops the market from growing. So let's get some naming convention aligned as, the regulator, as brokers, as lenders. That for me is key. Let's start to break down these silos so we all know there. Okay. And then let's also address commission bias. There's commission bias. Don't tell me that equity release is more complex than a specialized loan. We underwrite it, and I can tell you equity release takes about 30% of the time, if not less, than a retirement interest-only mortgage on our end to fact check stuff. Right. So there's a commission bias.
Yeah.
And we as a market need to break down those barriers. And in that, those three events, I think grows the market. Where I think LiveMore can play a tune in the next 12 months, if we have broken down one or more of those three within the industry and worked with other industry people, I'd be happy. We've got big ambitions ourselves. We want to bring other funders to our platform. We're agnostic to what those funders look like. We just want to be able to work with brokers, make them more efficient. And what do I mean by more efficient? Later life lending can be complex in a conversation. But the mortgage matcher takes away that complexity. So they know that if actually they put in their customers' details, there's a higher probability we can place them, or at least give an indication of what type of product they could have. Because there are going to be sometimes, there are some lenders out there that will have a slightly cheaper rate than us at points in time. But that's why we have 300 products. We're not, we're here to write, to increase market share. So really simple. I won't go into lending numbers, but it's really breaking down the issues that if all of us are honest with ourselves and take accountability, are in the market.
Yeah, no, absolutely. I think that's some great answers there. I think, we've only been chatting for 25 minutes there, and I could easily do another 25 with you, but we'll end there. But I think we put out some very fair challenges, which have all been very consumer focused, and we just need some companies and people to stand up to the plate and say, yeah, actually, I want to collaborate on that. I'll do that. Let's do it. And we've got those companies and those bodies within the market, but there just feels a bit of a reluctance to do what we all know needs doing.
Yeah, exactly. I just, and I reach out, given you've got, 700 plus listeners to the podcast, Stuart, I think it's about all of us getting together,
Yeah.
and saying, how can we make change? So, I open up to the podcast, drop me a LinkedIn, shoot me an email, or, reach out to Stuart, and let's see how we can get together and make some change. Because I think united together, we can change this industry, drop the shackles of old school perception, and grow the market. Right? It's there.
Leon Diamond, with that phrase and sentiment, I think that's a great way to end our 100th episode. So thank you very much indeed for joining me.
Stuart, much appreciated. My pleasure. Look forward to the next one.